All right, everyone. Thanks for watching watching just a little bit more. Now, this section is going to be probably 20 to 30 minutes long. I don't know exactly yet, but we will see. All right, I'm going to show you the things that I want to cover in this session right here. These are the things that I plan to cover in this session. Okay. Weekly trading zones. That's one of the things we're going to give to you for free. All right. Trade setup. I'm going to show you an example of the trade setup, and then we'll discuss the trade setup. All right. This is going to be a live trade setup that was recorded today in the room today, and we'll show you that, and then I'll discuss it. And all of these other things will come into play as I discuss it, but what markets these are, what type of charts we use, the time frame that we're using, other time frames that you can use if you choose to, what charting platform this is, what are these indicators, the BBC, the MA1, the black step line, the cycle, the slingshot, the green line, paint bars. If you don't know what those are, the DOM, the depth of market, that's where you actually put trades on and take them off. The trend, how to identify it, crossovers, all this stuff. Okay, and the track record. Yes, there is a track record, and you'll get to see that. It's right up here. I'll show it to you at the end. And a free charting platform. All right, so we're going to show you all that and how to get the free charting platform. So let's start out right now with the weekly trading zones. Okay. Now the weekly trading zones are going to be delivered to you just by showing up to this. They're going to be delivered to you in hang on a sec. They're going to be delivered. Well, I'll just give you an example. Whoa, hang on. Here it is. The weekly trading zone is going to be delivered to you just like this. All right. So we have them for the ES, the YM, the Russell, crude oil, gold, the NQ, silver, and the euro. What these numbers are they're like small groupings. You're going to have like a point in between the ES. You're going to have a point in between here, 99 to 700, 25 to 26, 70 to 71. So there are areas on the chart that you should know about that you can use in your trading. You can choose to trade to them, to not trade when you're with them. That's usually what I do. Trade out of them. You can do that. Here's an example. Okay, this is crude oil right here, and I'll go to a 30 minutes so you can see more of them. See, these are the weekly trading zones on crude oil. Now, this is the GCLH contract, and today is 2/2/22. You're not going to have another date like that in a while. All right, so the weekly trading zones, well, not for 11 years, 3/3/33 will be the next date that matches up like that. Anyway, you'll be sent the trading zones, and what they are is areas on your chart that price is drawn to. And when it gets to that area, it's usually going to either consolidate or be rejected. All right. Occasionally, you're going to have it pass right through like this, but you can see it went just about up to the next one. It came right back down to it. And if you look further, it went from this one right down to this one. Now, these are half-hour bars. These are 30-minute bars. So this little period right here could have taken quite, this little period right here within these two lines could have taken quite a while. Looking at it in a half-hour bar, it doesn't look like it took that long, but you can see over here, this is where it went up there. Then this bar went all the way back down here and all the way back up there. And this one started up there and went all the way down here. And then it went all the way down to the next zone. So these are the weekly trading zones, all right? We're going to give you 1 week's worth of those for free, all right? That is what I had said we would do. And at the end of my conversation here with you, I am going to show you a charting platform that we're going to give you for free as well. All right. So right now, I'm going to take a moment and show you just a little snippet from the live training room this morning. It was a crude oil trade that I took, and then we'll go back and discuss it, and we'll discuss the indicators that were required and just the setup and the follow through of the trade. All right, here it is. All right, there was another trade here while I was writing stuff down that happened on a crude. See, this one did not hit the BBC, but it did close below the trend line right there. Okay, so right now the crude is starting to move again. It should continue down to those numbers that I outlined down there. Okay, so I got some slippage on this one. My entry point, I guess I didn't, 35. I'm in the right spot. Okay, so what did I say? 20, right? So I'm going to throw a target down there at 20, and now I'm going to lock in 5 ticks. That's $50 a contract. There it is, right down to my target. Okay, so if it was 5 ticks here, then all the way down to 20 is another 10 ticks. So that's $150 a contract that I just made right there. Okay, $150 a contract. And that was from right here, 87.35. Why was this a trade? Because it was a close on or below this trend line, right? And that's it. You just do that over and over again. There's another one right here, over and over and over again. Okay, so there you have it. That was a crude oil trade. All right, now this is the market that we were trading. These are the indicators that we're using. And let me just scroll back to the actual time that it happened, and you'll see this is exactly the chart that I did it on. This is everything that I drew in that snippet of code. But before I go any further, let me check off a couple of these things, all right? So I showed you what the trading zones are, showed you the trade setup. Now I'll get into these other things. Now, what markets are these? Well, you can trade any market that you want. The ones that I do in the morning, I do crude oil, gold, and usually I'll do the ES. But lately we've been having a little bit of an issue with. Hang on, we've been having a little bit of an issue. Here it is. We've been having a little bit of an issue with the ES in the DOM. So I switched to the YM, and I'm doing the YM on an 8-tick range because it's a really fast market. And I'll go into all these other things, but the thing to know is that you can do the same exact trade setup using the same set of indicators on any time frame that you want to, and on any market that you want to. All right. These are the markets that I choose because I do it in a 2-hour window every day. And in that 2-hour window, I like to have a lot of opportunities to show people how it works and to make money. Now, this right here, if you look at the top, the training room is to train you how to make money day trading futures contracts. It'll be a fast moving environment where questions are encouraged and should be entered in the question box that's provided by GoToWebinar. That's what we use. I encourage the questions. I may not answer them right away, but I will answer them. If for some reason I don't answer your question, don't be afraid to type it in again because they all scroll up out of view on me. All right. Now, it is a fast moving environment and we are in there to make money. I'm in there to teach you how to make money and to do it right in front of you. You're going to be looking over my shoulder while I put trades on and while I take trades off. And I'll guide you through trades as you saw in that little example. I'll put trades on. I'll tell you about it when it's setting up. You put it on and guide you through it as it happens. All right, so let me get back to, where was I just a second ago? Here it is, my checkboxes. All right, so the markets, the ones that I do, I told you about. The type of charts and the time frame, well, these charts are from Daniel's Trading. They're DT Pro charts, okay? Now, anybody that clears through Gain Capital is going to have white label software that is very similar. It's going to be the exact same thing. It's just going to have a different name on it, like Global Zen Trader, Zaner 360, Apex Trader. There's a bunch of them out there, and we have our indicators on about 10, 15 different ones. In addition to that, we have them on NinjaTrader 7 and 8, and we have them on TradingView. Okay, so we have quite a few places covered where you'll be able to access our indicator set. And on any one of these, you'll get a free version of it for a limited amount of time. And so you'll be able to test everything out and try everything out. Now, the little snippet from the morning session shows you what it's like in the morning. Today, I'll show you when we get to the end, the spreadsheet, the results. That's at the bottom of my list. Way down here at the bottom is do we have a history? Is there a track record? When I get to that, I'll show you. Today was probably my most complicated day getting started in a couple of months anyway. It just didn't start out easy today, but it ended up really well. We ended up doing pretty well today. In the last hour, we did a great job. There was a lot of opportunity, as you can see. Now, this trade that we did here, all right, first, let's look at the indicators and the time frame. You see this here? This is a 4-tick range chart. What that means is every bar is 4 ticks high. Now, if you're not experienced with trading at all, there are different types of bars, all right? You can have like a 5-minute bar, and what that means is every bar lasts for 5 minutes, right? When the bar ends, it goes to the next one, and it opens up, and the next bar lasts for 5 minutes, okay? That's a 5-minute bar. I mean, you can do those in 5 minutes, 3 minutes, 30 minutes, hourly, weekly. You can also do tick bars. All right. I'll just show you this. This will be the fastest way to explain it. You can do tick bars like this, and most of the time you're going to do some larger number, like 233, maybe some Fibonacci number. 233 is one, 344 is one, 610 is one. They're just random, they're just random numbers of ticks, and what they show you is the number of transactions in a bar. Well, we did not want to see that, but what they show you is the number of transactions in a bar. Like after there are 233 transactions in this bar, it's going to paint the next bar. So you don't know where that's going to end. You don't know where it's going to end. You know where it ends is where the next one begins, but you don't know where the next one's going to end either. All right. So that's the difference between those bars, minute bars. You know when the minute bars are going to end. You don't know when a tick bar is going to end, and you don't know where it's going to end. At least with a minute bar, you know when it's going to end. If you look at other things like a volume based, you could do it like a 5,000 contract bar. And what this is, again, with the thing, what this is, every bar has got 5,000 contracts traded. All right. Again, you don't know when it's going to end. You know it's going to end when you get to 5,000 contracts. You don't know how long that's going to take. All right. You know it's going to end when you get to 5,000 contracts. You don't know where it's going to be. You just know 5,000 contracts, it's going to go to the next bar. What I like to use are range bars. Now let me show you that in here. All right. You see it says range bar. Now right here, you see it says the word tick, and up here, it also says the word tick. This is the one that I showed you that was a 233 tick. That is 233 transactions per bar. All right, so every bar is going to have 233 transactions. In this case, the word tick, I want to explain this so you understand it. In this case, the word tick does not mean the same thing as it does up here. Up here, it means transactions. Down here, it's one tick of price movement. Okay, now I like to use a 4-tick range bar. What that means is every bar is exactly the same height. Okay, every single bar that you see here is exactly the same height. And that way, if I know where the top of the bar is, I know where the bottom is going to be. So if I'm looking to sell or go short, then I just have to know where the top is, do the math, figure out where the bottom is going to be, and get ready to sell the next candle. All right, and that's what I do again and again and again. And I'll be saying those numbers out loud to you. I'll say, okay, so we got a high here of this, and we're going to have a low of this, and we're going to have, we're going to sell if we get a down close. When I say the words down close, I mean a close at the bottom, and up close means a close at the top. That's the thing about these bars. Every one of them can only close in one of two places. It's got to close at the top or at the bottom. Okay. Now you might get a bar like this one right here, which is called the dragonfly doji. That means the open and close are at the top. Or get one like this, which is called the gravestone doji, where the open and close are at the bottom. Okay. With range bars, they're not as significant as they are with other types of bars, minute, volume, or any one of those. But they still are significant. You'll see the gravestone dojis mostly at the top of moves and the dragonfly dojis at the bottom. Okay. All right. So let's go check a few things off here. What type of charts are these? I did that. What charting platform is this? Are there others? I did that. What are these indicators? All right, well, let me get into that right now, and I'll cover all of these all the way down to here right now. All right. Now you saw the trade setup, okay? So what I'm looking for, well, there are actually there's 5 steps in a trade setup. Okay. Step number 1 is the MA1, which is this red and blue line right here, crosses the BBC. Well, actually, step number 2. Step number 1 is you define the trend. Okay, that's step number 1. So let's go back here to that trade that you saw the video of. Okay, so step number 1 is you define the trend. That means you have lower highs and lower lows. A trend means you can draw a trend line down the tops and down the bottoms in the same move. Okay, that defines a trend. That's a downtrend. All right, now if we go back, see this is a downtrend right here. Go back a little further, this is an uptrend. Okay, now these are trades that triggered today that I ended up missing for whatever reason. But they triggered this morning and I missed them, but this is an uptrend. All right, so what we're looking for right here, once you identify the trend, you see that you have an uptrend, then you look for the MA1, which is this red and blue line right here, to cross over the BBC, which is the green line right here. Cross up above it, then pull away from it after the cross, then pull back down and touch the BBC like it did right there. Now the next thing is right down here. You just look down here and see if the cycle, which is the red and blue line, is blue, and if it's above the green line. If all of that is true, then you go long right here. You go long or buy right here on the up close of this bar. Where's that up close going to be? Well, right here. If you know the bottom is 87.72, then top's going to be at 87.76, right? Just doing the math. Let me slow down a little. You know where the bottom is, 87.72. You see over there on the right, way over here on the right. 87.72 is the bottom of that bar. So add 4 ticks to that, you get 87.76. Okay, so what you do when you get like that is you throw a buy stop order on 1 tick above where you know it's going to be. So it would be up here at 87.77. I'm not going to do it right now because it's after market right now. I don't actually want to place, I don't want to place any trades, but I would right click right there. This is called the depth of market, DOM. I'm going to get into that in a minute. Okay, but that's where you place your trades. And because you know ahead of time where that bar is going to close, you can be proactive. Now, in the room in the morning, I'm going to be telling you all this stuff. I'm going to be saying, okay, the bottom of this bar is here, the top of this bar is going to be here, and an up close would be a long trade. So bang, you get in. Now, right here, let's say the entry point was 87.76 and you got in at 87.77. We'll say, okay. It went up to here to 87.95 before it pulled back. That's 18 ticks. This is crude oil. It is $10 per contract per tick. Okay. Now, if the words per contract scare you, you're not actually going to sign a contract or anything like this. These trades only last a couple of minutes. You're in and out, and the contract is just the number of items that you're getting. Okay, you're going to buy one item until you earn the right to buy more than one. You're going to buy one, and you're going to get rid of it right up here, or on the way up there, anywhere on the way up there. It's all profit. From right here all the way up to here is all profit. Okay, so you're going to have all that going on right there. This right here is where you're just going to be looking to take profit. The entry point is here, 87.77, as I said, and $10 a tick if you do it with one contract. It's whatever. And to multiply it, you just have to add another contract. All right, add another contract, and then you'll have multiples of what it is. But you have to earn your way up to that other contract. We have a thing called the 2420 blueprint, and we'll show you how to add contract and when you deserve to add contracts. How to work your way up to that point. But you can see there was one right here. There was another one right here. Now this one was a little bit different, okay, because we didn't actually hit the BBC down here. You see right there, it did not hit the BBC. That's when the trend line comes into play. So you have to draw a trend line, and then your entry point is going to be on or above the trend line. Okay, it's going to be on or above the trend line. And this one had a really nice run. This one, your entry point, let's say it was 87.94, maybe give a slippage, 95. It ran all the way up here to 88.24. So that's $290 a contract right there. And how long did that take? Well, this one started at 10:44.17 and ended at 10:46.03. So a couple of minutes. This one, 10:43 exactly to 10:43.46. So this was 45 minutes for that. And that was a couple more minutes right there. 45 seconds. And this was a couple more minutes right here. And you can see these are the ones that I did do live in front of everyone. And I don't know what I was doing when this was happening. I might have been trading some other market or showing something or doing something. But ideally, what you're going to do by watching me do it over and over and over again and learning the rules on your own is place these trades on your own. You won't need me anymore. Okay. Ideally, that's where you're going to be. And you get your own set of indicators. You do all this stuff. Okay. So those are now what the indicators are. I didn't go through all of the indicators yet, right? But I went through a couple of them, just the ones that are up here. Now, the BBC is the green line right here. Here, let me slide this over a little bit. The BBC is the green line right here. The MA1, I said, is the red and blue line right here. The black step line is right here. Now let me discuss the black step line with you for a second. All right. Now the black step line is only used in here to disqualify trades. All right. You want the black step line, which is this line right here, to be on the same side of the BBC as the MA1. If the black step line gets below the BBC, like right here, you're not going to go long anymore. You're not going to buy. If it gets above the BBC, like right here, you're not going to sell anymore. Okay, so you're not going to buy when it's below and you're not going to sell when it's above. All right, that's telling you basically to stay out. And so this area right here, if you don't know, this area right here is an area of chop. Once you don't have a new swing high, when you get a trade set up and you don't get a new swing high, then you probably just want to wait until you do get a new swing high or it changes directions. You see this was at a direction change spot right here. We did not get a new swing high from this, and it was at a direction change spot, right? So it turned around and then it started going down. And right over here is where we started grabbing things on the downside, right? Now, the way that it worked out, I was able to take a trade from right here down to here, and then another one right there, and then I ended up with a break even right here, right? Now, you can see there was a weekly trading zone down here. So if I'd have seen that when I was up here, and I didn't, if I'd have seen that when I was up here, I'd have probably just stayed in it until it got down to the zone and not tried to do a couple more trades. But either way, you know, I grabbed that one, took profit down to there, and then I got that one and that one. And these are the ones that were in the video clip that you just watched. And you see these lines down here. I'll teach you how to see those spots. That's areas that price should get down to. Once you get into a trade, I'll teach you how to manage the trade, what to expect out of the trade, how to get out of the trade, all that stuff. I mean, anybody can put a trade on. It's knowing what to do when you're in it. That's the big deal. So, you know, you'll be looking over my shoulder while I do all of this again and again and again and again. And you know, I've been doing this stuff for over a decade, every day. And, you know, a lot of times it's the same set of eyes watching me. But, you know, whenever we get somebody new, you know, it's the same set of questions usually, but don't be afraid to ask any question. All right, any question you ask, you know, has probably been asked already, and I'm sure we probably have an answer to. All right, so the colors up here, let's just look at the colors for a second. I didn't discuss much of anything down here yet. This is critical. Everything down here is critical, and it plays into the colors up here. That's why it's my segue. Down here, the cycle is the red and blue line down here, and that is your long-term direction. The green line is your short-term direction. The cycle is the slowest line on the chart. Out of all these lines, the cycle is the slowest line, and the green line is the fastest. What you're seeing down here is what price action is doing up here. It's just illustrated down here, much easier for you to see. And it gives you an idea of what to expect when you get into a trade. All right, you have this pullback right here, just like you did right here. You have the pullback. Green line pulls away from the long-term direction. So now, everything is telling us it's going up, right? Everything's all color-coded. Everything is saying it's going to go up. You get the cross, you got your bullish trend, right? An uptrend, higher highs, higher lows. You get your bullish cross right here. It pulls back. It's showing that it's all bullish down here. You're pulling back against the longer-term up direction, okay? So all you need is an opportunity. The green line right here is acting as support. So it's pulled back and hit support. You found support, you just need an up close to continue the move up. Right there is where you enter, right there is where you take profit. What you expect down here when the green line pulls back is that it's going to work its way back up into the cycle, just like that, and then do it all over again, just like this, and just like this, and work its way back up again, just like that. Okay, and then pull back again. In this case, it pulled back again, and it started to move up, and it gave an indication here. Now, I don't have the trend line drawn, because it was probably moving really fast and I didn't have enough time to draw it. So I just said it out loud probably. And right there was your entry, the close on or above the trend line. And right here, a close on or above the MA1 or 4 ticks in profit. You move the stop to break even. And so I got to break even on that trade. Now, we'll go down here again for a second, and then I'm going to discuss risk management. That's not even on my list, but down here in the slingshot, the cycle, again, is the longest line or the slowest line that we have on the chart. And the green line is going to show the quick pullbacks against the long-term direction. When you see this pullback, you want to look up here and make sure that you're getting a trade set up. And you want to be in it as soon as it confirms either a bounce off support, in this case for a long, a bounce off support, or over here, over here, a bounce off resistance. Okay, the green line becomes resistance when you get below it, and it's support. I mean, yeah, it's support when you're above it, and it's resistance when you're below it. Okay, that's the BBC. Now, this happens again and again and again all day long. I'll show you in just a few minutes. We're going to be to the spreadsheet part, so I'll show you that in just a few minutes. All right, but risk management, that's what I wanted to discuss. All right, so every trade starts out with the same amount of risk, every single trade. Now, I showed you the DOM a minute ago here. Let me just bring it back up. Here it is. Now, every trade starts out with 8 ticks of risk. You see that? That is 8 ticks of risk. This is an 8-tick risk stop. 8 ticks is 2 bar lengths. All right, these are 4-tick bars. 8 ticks is 2 bar lengths. Usually, if you get into a trade, it's going to stay within that kind of risk and then move in your favor. If it doesn't, then it's going to move. It's usually going to move well more than 8 ticks against you. So you don't want to risk any more than 8 ticks with this particular chart, this time frame, this particular chart. Okay. Now, if you get into other charts, like a 30-minute chart, like this one, you know, your risk is going to be the prior swing high or low. Like if you had a shorting opportunity. Now, this isn't really a great looking chart right now, just because of the way the markets were. But if you look at it, you're looking for the same type of thing. This is a 5-minute chart now. All right, you're looking for the same type of thing, a pullback test to the BBC with an up close, and then you know you're going to want to go long, and your risk in this case is going to have to be down here. Right now, it's more than 8 ticks, but you're expecting it to get up to here. Now, this one didn't make it all the way up there, but you'd be trailing your stop and taking profit. Over here, it pulled back, tested the BBC. You have bearish separation. You're looking for a down close. Your down close is right here. This was a down close. I know it's a blue bar, but it was a down close. I'll explain the bar colors in a minute. And for that, you would be looking for it to get all the way down here. Your risk on this one would be up above here. Risk means your stop would be up above here. Your target would be down here. So you can do larger time frames if you want to. Now, I have 2 hours in the morning, and I want to show you as many times as I can that it's easy to do this and do it over and over and over and over again. I think we had 33 trades this morning between the 3 markets. And that's in 2 hours, and I still missed most of them. I mean, you go back to those nice crude trades right here that I missed. You know, you'll see bunches of them that I missed, but I'm doing a lot of things there in the morning. Now, what we want you to do, hang on, let me go back here to the spread, to the checklist and check some of these things off. I did that, the slingshot down in the bottom, the cycle, I went over that, the green line, I went over that, the paint bars, I didn't cover the paint bars. Okay, the paint bars, these are fairly new. I just created this last weekend, but it only displays what's been in front of everybody for years. If the MA1, which is this line right here, and the cycle, which is this line right here, are both red, they're going to be red. If the MA1 is blue and the cycle is blue, they're going to be blue. If one's red and one's blue, they're going to be white. Okay, now either one could turn first. It doesn't matter if they're not the same color, it's going to be white. Okay, that's the difference. And what that does when you're getting into a trade, if I go all the way to the end, I don't think there's going to be any volume in this. No. What time is it? 7:26. Let me look at another market that might have some volume in it. Here, the YM might have some volume in it right now. Not really. How about the ES? Nope. Nothing's got any volume right now. All right. Well, either way, when a trade is actually developing, like right here, you would see this trade developing, and this is your trend line. So you're looking for a close on or below the trend line. This bar is building. Now, if this bar is red, that is going to give you a lot of confidence to take this trade, all right, to take that trade and look for it to get down. Well, somewhere down here would be a nice target, but it didn't get all the way down there. But either way, you'd be locking in some profit on that move, okay? All right, so let me go here now again. Now the paint bars, I discussed the paint bars and why the colors are what they are. The trend, I discussed that. The crossovers, you know, the MA1 crossing the BBC and back. Stops, targets, I discussed that. Trailing stops, I'll I'll show you that, and then the track record, and then the other free thing is how to get TradingView. All right, so the DOM, I guess I discussed the DOM a little bit with you. Now this is your depth of market. What you'd be doing is, like, if you were gonna buy, you'd put a buy order up here, or if you were gonna wait until the bar closed, you would just drop it right here. You can do limit orders, you can do bracket orders. What I do is set the stop and I leave the target open. And then as the trade starts to develop, if I see some good number that I think is going to be the place that it's going to go, I'll tell you about that number, and I will do just like I did in that sample that you saw. I will draw a line like that one right there, and I'll say, okay, well, it's going to go down there, and you saw me actually lock in. I think I locked in 5 ticks in profit and left it open to go down there to wherever it was going. I actually put a target down there, I think, at the number that I thought it was going to go down to, and it got there and then went a little further, I think. Well, obviously it went a little further, but that is more of what you're going to see. Okay, again and again and again and again. You're going to see it over and over and over again. Trailing stop. Now you can trail your stop. When I move that stop, in this particular case, when I move that stop to plus 5 ticks, I was waiting for it to go the rest of the way down. But you can trail your stop behind the MA1 if you want right here. And if you do that, you wouldn't get out till down here. All right, you can trail your stop behind the black step line if you want. And you might have not gotten out till down here. Anytime I can get 10 ticks in profit in a trade, I'm going to lock in 10 ticks. That's just my way of doing things. All right, so that's how you do a trailing stop. The DOM, I showed you that. Now let's do the spreadsheet right quick. All right, now I fill this out. This spreadsheet, by the way, goes back to January 2nd of 2013. It's got the daily results going all the way back to January 2nd of 2013. Every day that I trade, I fill this out at the end of the session, and everybody that's watched me all during the session watches me fill this out. So they keep my feet to the fire, make sure I get it right. What we have here, this is December, right? These are the results for December and last year. What this is right here is a summary of every month that happened last year. What we made with one contract in a month. Now, if you added one contract per month, what it would add it up to, that's gross, not net. And right here, if you quit when you get your goal for the day, and that is what we teach people how to do, what we encourage people to do anyway, is to stop trading when they get their goal for the day. And then, after you earn enough profit, you can add another contract on. So what I did was I kept track of it if I added one contract per month. Now, our rule, this is our rule, so our 24/20 blueprint, is to add one contract per month. Okay, if you add one contract per month, then it's one contract every $2,000 profit, but I was just doing one contract per month. If you add one contract per month and you quit trading whenever you got the goal for the day, and you did everything exactly the same as I did, then you're going to get down here, and I worked a total of 65.92 hours last year. For the whole year, I worked 65.92 hours getting my goal for the day. Now, I traded for 2 hours every morning, but just getting my goal for the day, that's how many hours that I worked. All right, now these are monthly summaries of how many minutes it took me to get the goal for the day for the whole month. And if you divide all that, add it up, divide it by 60, it becomes 65.92 hours. And if you add up what I earned adding one contract per month, and you divide that by the amount of hours that I actually had to work to get there, it would have worked out to $3,065 an hour. Now, I know that's a huge number, but it's $3,065 an hour is how we ended the year. Now, this is this month. Not this month. This is January. So we had a pretty good month in January. We started out the year really strong. And what you see over here now is what I got in the number of ticks, like in crude oil, 40 ticks, gold, 38, the ES, 22, and what that all adds up to. Now, these are all gross numbers right here. And over here, it's the number of minutes it took me to get to the goal for the day and the number of trades it took me to get to the goal for the day. So it took 6 minutes in one trade, 4 minutes in one trade, 52 minutes in 11 trades, 2 minutes in one trade, 3 minutes in one trade, 4 minutes in one trade. And this is the dollar value that I was at gross when I got the goal for the day. And then I continued trading for 2 hours, and that's how many trades I ended up taking in the room on each given day. Right, that's how it ended up. And I know some of you guys, if you're in here, if you're experienced, you're going to say, well, what about the commissions? That's a lot of trades. You're going to pay commissions. Well, right here, if you had an $8 commission, this would be the net profit if you did every single trade. And if you had a $5 commission, that would be your profit net. Okay, net. That's all in, all out. And so, I did 8 and 5 because everybody's got different commissions. I mean, I even have them at different brokers. I have different commissions. Even in one broker, the same broker, I have different commissions depending on the markets. But this is this month so far. We had some issues with the ES at the end of last month. You can see. So I stopped trading the ES and I started trading the YM right in here. And so I've been doing okay with the YM. The YM's been actually kind of fun to trade. So you can see, like today, for instance, I made 86 ticks on the YM, 66 ticks in crude, and 14 ticks in gold. Came up to $1,230 in the morning session. That's gross, and that's if you did everything exactly like I did. Now, today it took 57 minutes. That's a long time for me. 57 minutes, almost the whole first hour, and 18 trades. That's unbelievable too, to get to the goal for the day. And at that point, we're up $300. Now the goal for the day is to make $100 per contract. But at that point, I had 2 trades going on, and they both ended up being big winners. And it took me from -6 ticks on crude, I think, to plus $300 overall. And I took a total of 33 trades this morning. I took 32 yesterday and 33 today. So on the month now, so far, we're 2 days in. It's 2/2/22. That's February 2nd, 2022. We're up $1,675 per contract. That's over 2 trading days, averaging $837 per contract per 2-hour trading day. Now, again, those of you guys who are saying, yeah, but you had all those trades, this is the net for 2 days. $8 commission, $5 commission, all right? And down here, I didn't figure all this stuff out. I think it's pretty close to right now. I think I got it all calculating right. But on the year so far, we're at 19,776. It's over 22 trading days, averaging $898 per contract per 2-hour trading day. And the way it's worked out so far this year, we're averaging $767 per hour. But we're still early on in the year. It's going to take a while for that to build up the way that it did last year. But that's the spreadsheet. And I fill it out at the end of every session. And this is my results. And if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom of it. And yes, you'll have access to the spreadsheet. You can make your own spreadsheet. You can do whatever you want. All right. So now TradingView. All right, the free charting platform. Now, TradingView really is free. All right. You're gonna have to sign up for it. Now, go to tradingview.com just like this. Okay. Do not click get started right here. Don't click that. Come over here and click on chart like this. Okay. When you click chart, it's going to bring up some kind of chart. This is Apple, and click start free trial right here. All right. When you hit start free trial, it's going to bring you here. Now, this is just a thing that they assigned that actually to me, I believe, based upon my email address or one of my email addresses. But you just have to put in your email. Come down here. If you don't have an account with them already, just come down here where it says don't have an account, sign up. Click on that. It's going to bring you here. Now, put in your email. You can log in with Google, Facebook, any one of these things. But just throw in your email address, and it's going to bring you here. Put in your email, create your password, username, do this, hit create account. It's going to send you an activation email. You're going to have to click on it within your email. So make sure you get your email right. It's a real email. Now, they're not bad about sending you a whole bunch of emails about chasing you around to get you to sign up. But once you do that and you sign up and you click the activate thing, then you'll be brought back, and you'll be given an ID, okay? And your ID, well, I'm going to sign in with one right now. Right, this is one right here. Well, I guess I can use that. Yeah, I'll use this one right now, I guess. You sign in with that ID. Actually, no, I'm going to sign in with this one. Okay, you sign in with the ID that's assigned to you. You have to send that ID to us. This ID, copy it and paste it and send it to us. All right, and we will enable the indicators for you on TradingView. All right, now we'll let you have the indicators for free for a little bit, and we'll define that term to you as things go on. But well, that's another free thing that you get is free indicators from us for at least a week. And you hit sign in, and you sign in with your indicators, and now you're going to be brought to a chart like this. All right. Now, once you send us that ID and we enable it, when you go to indicators like this, you're going to have this thing down here that says invite only scripts. Click on that. And right here, you see TIQ price panel and TIQ slingshot. That's Trading IQ price panel and Trading IQ slingshot. The price panel has all the things you need. That's going to be up here on price. The slingshot goes down in the oscillator panel. Okay. So you only have to click on that once and see all the indicators show up. Click on that once and all the indicators show up. Just close it, and now you've got your charts. All right. You can get rid of this volume thing if you want. They put that on there by default. But now you've got your own charts. All right. Now you're not going to be able to get a 4 range. This is a daily chart. Until you actually sign up with them, you're only going to be able to get a 10 range. But still, I mean, it's a 10 tick range, and you can still follow along and see the same thing: the pullbacks, the separation, the opportunity to get in, and everything. And this is free. All right. The indicators themselves, we'll give those to you for free for probably a week, at least a week. We'll give you those for free. And so that's it. That's the whole charting experience and platform. And you're going to be watching over my shoulders while I place these trades like everybody else did today. All right. Live in real time, right in front of you. All right. That is what Trading IQ is all about. All right. So click on the button, whatever the button is, it says to get to the next page. And I'll hope to see you in the morning. All right. Thanks.